Good afternoon, guys. My name is CryptoCape, and it's been a while since I've last recorded any tutorial lesson. I've been away for quite some times now, and I just returned. So let's get it started all over again. I will continue from the last series of supply and demand, which I was doing. So in this particular lesson, I want us to discuss the differences and similarities between supply and demand and support and resistance. I know many people trade support and resistance and they convince it or confuse it with supply and demand. It can be intriguing and it can be deceiving at the same time, and it can be confusing when you trade support and resistance and supply and demand, because the rules are clearly not the same, but because we use zones for both. Some people, when they see a support and resistance zone, they take it to be supply and demand. Whereas some people, when they see a supply and demand zone, they take it to be support and resistance. The laws are very, very different, and it's a thing we know. And for this, we know in support and resistance, we say a support is a place where price couldn't go below for a number of times. It can be horizontal, likewise it can be diagonal. So in this essence, this particular line of rising price line will be support, whereas in this instance, the floor here will be the support. But this is not quite the same for supply and demand. Also, in support and resistance, they say if you have a support and it's been supporting price for a while and then it breaks down, it is expected that this support broken will turn back into resistance and keep price down. Whereas in some places, the floor of support that has been supporting price for quite a while, when it breaks, becomes resistance, and then when it breaks up, it gets reclaimed as support. So these are the expectations for support and resistance. I am using support in this example, but the inverse of this is true for resistance. But in supply and demand, we look for area of explosive moves, where maybe there has been some pause in the market, and then we have an explosive move away, or a big crash, like we have here. So we look for the area, the origin of such explosive moves, and that is where we want to find our demand or supply zones. Now, the major difference and the way I see people trading supply and demand, like they trade support and resistance, is that, like I said here, a support broken is expected to turn to resistance. So some people now, they trade demands that if a demand is here and the demand gets broken, it becomes supply. That is entirely not true, because it defies the very essence of supply and demand. We have to look at the definition of what a demand is or what a supply is for us to see if this analogy of support broken becoming resistance is also true for demand and supply. That if a demand is broken, it becomes supply. It is not true. It's in the definition. Also, some people say when you have a demand which breaks and then it becomes supply, that is false. And then when price comes above the demand again, it is automatically a demand again. This is entirely wrong. Instead of calling this demand, just call it support and resistance. We understand that is the law in support and resistance. And another law in support and resistance is the more touches, the stronger the zone. So if you have a price line like this that has been supporting price 1, 2, 3, 4 times, when price goes up and it's coming back, you will be confident enough to place your trade there, because you believe the more touches a support zone has, the stronger it becomes. But in supply and demand, this is not true, because the more touches, the weaker it becomes. So if you have a demand zone here and price is coming back. This is the origin, right? Then price is coming back. The first touch here is the best. Consecutive returns to the zone makes it weaker. So you see, it is opposing rule for supply and demand and support and resistance. Support and resistance, the more touches the better. Demand and supply, the more touches the weaker. I made a perfect example of this in one of the supply and demand lessons. Also, I explained a lot about support and resistance in my support and resistance lesson. So here I'm just comparing them for us to see the differences. So back to this analogy. Let me quickly clear this chart. So people say when you have a fast move away, which is the origin of a demand zone, and then price comes to it, it holds, and then it comes to it and break, they expect it to act as supply. This is very wrong. It is not support and resistance. And the reason why this is wrong is if we say something is a demand means there is availability of funds here that led to this move away, and on consecutive retest, the very first retest of that zone, there are possibility of leftover funds still available being placed by smart money or institutional buyers, which means retail traders are also seeing this, that for this lack of liquidity to come into play, lack of sell-side liquidity now as for demand, which means there is either excess demand coming into the market at this point, leading to this very strong move away. So the market may not be done, and consecutive return to this place, there are still availability of funds to be bought back in to the market. Then you see retail traders placing trades to fill their orders right before that zone. This pile up of orders will lead to another bounce back of the price. So if we have another test of this zone again at this point now, and then this zone gets broken, what does it mean? It means there is no more leftover funds at this zone or this price line. So for there to be no more funds left over to support the demand in place or to create another demand at this particular point for it to break down, shows there is lack of funds now at this point, or there is no more funds we need to, or the interest to buy at this point is no longer there. So when price returns to this zone, does it automatically become supply? No. Demand is availability of funds. Supply is excess supply or lack of buy liquidity. If there were to be a huge move from anywhere around all these points, breaking this zone, then we will have a new supply, which means excess supply came into the market at this particular point. But if we do not have that, and price just strode all along down through the demand, that means there is no more funds left over at this point. And for there to be no more funds left over doesn't mean that the market or smart money will be selling at this point now or creating huge sales leading to excess supply at this point. No. It may be at this point where the excess supply is coming and the force of the supply here on getting here exceeds the available demand and it breaks it. So it's an imbalance. Supply and demand deals with imbalance in the market. When supply when supply outweighs the demand available, that is an imbalance. It leads to a market crash or the price drops. And when demand exceeds supply, the price rises. So that is an imbalance between support and resistance. Between supply and demand. So a broken demand is not necessarily a supply, but we may have a new supply coming into the market. Like we have this demand zone, this is the origin, then we have the first test, it bounces, and at this point we have strong or excess supply coming into the market. Then price keeps dropping. Then on getting to this point, maybe it finds demand again, it goes up, but the demand is weak. Then we have channeled moves, which this also leads to a pattern, a bullish pattern, right? And this is giving you the sense of security that for a bull flag to be coming down into this demand for the second time, the demand is likely to hold. And you get something like this. Price get to this point again, and then we have a strong move down. This means there is a new supply coming into the market at this point. And for there to be a new supply coming into the market at this point, it's leading to the break of this demand, which means either the supply which came into the market exceeds the amount of demand here, leading to a break of the demand. So, is there any supply at this point? Definitely no. But is there a supply at the top of this range? Definitely yes. So when price comes back to it here, you do not expect here to play as supply. No. Rather, you expect price to come here and then retrace back down. That is why I do not trade support and resistance. But then looking at this chart, we do have support, right? Because for a price to come here and go back up, that will be the first touch of our support. That is why I always say supply and demand gives birth to support and resistance. So people will see support here, but then they will wait for consecutive retouch or retest of this particular price level to confirm the support. So if price were to do something like this, we have this one. Let me clear this chart again. So we have this demand zone, origin, then the retest, and then the bullish move. So if we have a drop like this, this will be the first line of support, and for this to be the second test of this support now, then traders are now believing that for there to be 1, 2, then the third retest, they are going to long it, which as a supply and demand trader, you wouldn't. You'll be skeptical to long this, but you can long it with confirmation after saying that the market is truly ready to reverse. And saying the market is truly ready to reverse to the upside means there are still availability of funds here, new or old. So support and resistance deals with the more touches, the better. Whereas supply and demand, the first touches is the best. All other touches can fail because you do not know if there are still availability of funds left over at that particular place. And demand broken is never supply. So one thing I like to talk about that do not make me to trade support and resistance is this. We have, let's say, a move like this. Easily, what is price doing at this particular point is resisting price from going higher at this first point. So there is a resistance here, definitely, no doubt. But is it a confirmed resistance yet? No, because market structure can come in play. We have a low, we have a high, we have an higher low, and then we might likely see an higher high, which means this point is not a resistance, but it will become a value resistance if price were to come from here, come like this, and then come back down, creating either a double top. Then we will see this as a confirmed resistance. But some people now, but this is still a first point of resistance, right? But it's not confirmed. But the moment this breaks from this particular high, they expect resistance broken to become support. So they anticipate something like this and price to go back up. That is the expectation. Elliott wave also supports this. Likewise, market structure. But then, this is an area of expensive price. The price was very expensive here, which makes people not able to buy. People were not willing to buy to keep this price rising at this first point of resistance. So supply came into the market here, pushing the price down. Weak or strong is still a supply. We are not talking about strong or weak or the strength of the zone right now. I've done that before. So we have a supply here on a resistance, definitely. So some people might also want to short this because of this little supply here. That is where you have to analyze to see if the supply you want to take is a strong one or a weak one for you to know either to take it or not to take it. I've covered that in previous lessons. So for EA to find support or demand at this particular point, for price to keep falling and then refuse to go back down but only up, means there is a demand here. Means there is a support here. That is the floor. And then because support means a price now keeping price from going further down. So there is a support here definitely, but not a confirmed support. Likewise, there is also a demand here. Why? Because a former area of expensive price finds a bargain where people are willing to buy. And this is a point where people were willing to buy and they bought in, leading to an even more expensive price at the top, which means this price line is no longer expensive. This is a bargain price, and for a bargain price to be here means there is possible demand at this point. And when you talk about market structure, the low leading to an higher high, there is likely a demand there, and we have a drop base value, right? But that is not the point of focus here now. So this is a likely demand, while this is a likely resistance turning to support. Most people expect this price comes into this new support and then bounce up, but I will expect this price moving from this side, coming into this demand and then coming back up. In as much as this invalidation level is not taken out, then we still have a bullish scenario. So while some expectation of support and resistance traders is to come to this high and then rally back up, my expectation is for resistance and support traders, their stop loss around this area to be taken out, creating further buy liquidity for the market into this demand where we have even greater buy liquidity. There are also stops here which can also give you a lot of serious liquidity on the buy side, which will then prepare the price to go back up. But the first point of call is the stops of resistance and support trader getting taken out from this level up onto this level of demand. Their stop getting taken out, creating a buy side liquidity, and then a continuous move to the upside. So a lot of times you see support and resistance traders, their stop loss getting taken out only for market to go their way. That is exactly why I do not trade support and resistance. So if we look at this particular chart now, at this particular level here, we have this first touch. If we are to count candle by candle, we have several touches, but let's just take it like a zone. Grouped. So at this particular area, we have a first touch. So we call that maybe the first support. Then this will be the second support now, as price couldn't go any below. Okay, let me make it a zone to the lowest low of this. So like this, we have a support zone. So this happens to be the first, second, and after seeing the second touch, you anticipate that another touch or another move into this zone will lead to a bullish move, which happened at this point, and we have this bullish move. Then here again, we have maybe stops getting taken out. But if we look to the left of the chart, we also have another touch of this particular area here. And looking at this indicator, which I have here, we have a demand at this point. By now, it's not that perfect up until here. From this particular, okay, let me use this box. From this point up until here. So we have this demand here coming into the market here, explosive move with some other conditions. So the indicator is giving me that there is a demand here. So we have a first touch of it here, which gave all this. And after this, if I were to take this trade, after this first touch, I will be very skeptical to take these trades because I am no longer sure if there are still availability of funds left. But then I will want confirmation if I am to take the trade. Now see, look at this pin bar coming into here and giving a pin bar. That shows that there is huge available funds at this point which are ready to buy back the market the moment price came into this demand zone. Consecutively, we have buybacks, but very weak buybacks due to the weeks and refusal of price to rally back up immediately like it did there. So here we have another touch. At the end of the day, the demand held, yes, but then what happened? This demand has given birth to support and resistance. So we have the first touch of support here, second, third, fourth. And the fifth time here, it broke down, found some bit of resistance before coming up. And then here, the support and resistance has been reclaimed. As you can see at this point, the support and resistance has been reclaimed. As the price went back up, came back down, then goes back up again. It has been reclaimed. But because this is a previous area of supply and demand, does this mean that it is a demand that is in play, that the demand is being reclaimed? No, the demand is not reclaimed. The demand has been broken right from this point. The moment price comes below it, that means there are no longer available funds here. But people now are seeing support and resistance at this level, and they are trading support and resistance. They are not trading supply and demand. That is why supply and demand with support and resistance can be very confusing. Supply and demand gives back to support and resistance, and previous supply and demand zones become support and resistance. So when people trade support and resistance, you may be thinking they are trading supply and demand, which is not entirely true. And if we are to look back into previous charts, this chart is not enough. As in, it's not, we have lesser data on this chart, so we couldn't do much on it. I would have loved to give another example. So I hope I've been able to at least tell you some little differences between supply and demand and support and resistance with this particular video. So if you have any question, you can ask on the Telegram group. You can also make your comments on the YouTube video, and then once I see it, I'll be able to reply and expatiate more. And if there are any other suggestions, or there are more suggestions, I am not perfect. I'm also a learner, so we learn from each other. So if there are suggestions on to what I think I should have said and I didn't say, please do not hesitate to suggest, and also do not hesitate to correct. Thank you for watching. And once again, my name is CryptoKid.